Nischal Maheshwari joining us at 2:10 today. Nischal, plenty happening with regard to global macros. One is, of course, tariffs, and tariffs impacting two sectors, at least in trade today. You have a pharma sector, which is surprisingly in the green, despite those tariffs, and maybe it's because of the push of implementation, at least over a year and a half or so. And the other one is commodities. Just talk to us a little bit about how you're viewing it. And do you view pharma as a potential buying opportunity at this point?
So, thanks for having me here. Good afternoon to you and your
Good
viewers.
afternoon. Good afternoon, Nischal.
So I think pharma, as you had said, basically the implementation is over next 1.5 years. Here, as far as tariffs are concerned, people are not aware for the next 24 hours. So what is the point on talking about 1.5 years the implementation is going to happen? Nobody really knows which way the pharma or what kind of tariffs is going to happen. And that's why I think the market is not given much credence to this thing. So I'm saying you will find one new tweet from the US president every day. So it's difficult to actually react on that unless it gets implemented. So I don't really bother about the that part. It's 1.5 years or a year away. The other thing, as far as should we look at pharma from this point of view, I think individual stocks still continue to look good. I like the cramp space out there within the pharma sector. And that space, that China plus one story is really playing out. We have been in touch and spoken to several of these companies, and they are saying the inquiries have been disproportional now in the last 2 quarters than it was earlier. So I think definitely there is a very, very strong momentum for the cramp space as far as pharma is concerned.
Okay, so cramps within pharma, healthcare at all, and more domestic facing, but healthcare at all on your radar as well, Nischal. There has been some centers of the market which seem to suggest that healthcare has run up and probably run up disproportionately. What side of the camp do you sit on?
Yeah, I do agree with them basically that healthcare is right now basically on the higher side of the valuation matrix. So one should wait for it. But having said that, I think healthcare is an industry basically like pharma, which is going to continue to grow at around 10 to 12% CAGR for the next several years. Because India is a hugely underpenetrated market, and definitely healthcare is one place basically one should be invested in. But wait for a better pricing basically to get into it.
And how would you play healthcare once that pricing arrives?
So I would like to play through the hospitals, maybe to an extent diagnostic chains, but largely through hospitals basically.
Interesting. Nischal, the other piece is, and good afternoon, of course, great talking to you. The other piece is in a difficult or a fast changing, let me requalify, fast changing and a fast developing news heavy period that we are in right now, as you rightly said, a tweet a day. You probably try and look for themes which have some certainty. And when I think about it, the spends on defense or the targets set for energy transition and renewable energy seem to be ones which have got a slightly longer lasting piece to themselves, right? So let me choose energy transition and try and understand from you. How convinced or not convinced are you about the growth versus the valuation argument in the energy transition space? Solar, wind, equipment, what have you?
Afternoon, Neeraj. Thanks for having me on the show. Yes, energy transition is a big one basically. Now the question remains to be how and what you play out there. Because if you really look at, let's consider first solar. And solar, I think the equipment side, basically, I think it's been overplayed already. There is huge capacity, or rather an overcapacity already in the system, basically for the modules. Slowly, the cell manufacturing capacity is also catching up. I think, if I'm not wrong, by 2027, even the cell manufacturing capacity is going to get there fully, or it will be over the demand. So both these sides, as far as the equipment is concerned, basically, I don't think so. There is much play left. Yes, the growth will still be there. There is no doubt about that. but the valuations have just run much ahead of any growth metrics. And you have yet to see basically the two large players coming into the Indian market. So Reliance has started selling its modules from the last quarter. And you will continue to see Reliance, by the way, is going to have the largest capacity, both modules and then the cell manufacturing. And it goes back towards basically even the chip also basically to be manufactured here. So I think Reliance is going to be the most integrated player, the largest player, and that has entered the market. So I believe basically as far as the equipment is concerned, more or less it is all played out, and the valuations are quite aggressive out there. So that is one part of the solar. The second thing is wind still continues to remain very interesting. Because the wind capacity, yes, the growth may not be the same as solar because you have constraint about where you are able to put up the wind turbines. But then you have only 2 or 3 manufacturers of the equipment. And as and when, if you really look at it in case of all these manufacturers, the bigger part or the big part is becoming basically the servicing revenues. And that is quite substantial, and the margins are quite high on that. So I would actually like to, at this point of time, look to add maybe on the wind side rather than on the solar side.
But so are the equipment players trading at decent valuations, Nischal? I mean, in the sense, Suzlon is no longer at 85, Inox Wind is no longer at whatever 230 or whatever, but not cheap, right? Or are they okay?
So they are not cheap, but then they are sort of a duopoly kind of a situation. So whatever happens, and they are giving a tough competition to the Chinese imports. And given that the complexity of the equipment, you definitely require somebody who's there on the ground. So that's why these two guys have been winning over the Chinese equipment, the German equipment, and all, because the servicing part, the availability of repairs and all, I think these two definitely have an edge.
Nischal, do you find better value within the power play of sorts, but would you find better value in other spaces within power? Transmission equipment, energy exchanges and IEX and the like? Would power financiers be an option? Would those pockets be a better way to participate in power? And just rank them for us so that we get a better perspective or a better lens into how you think of it.
So my top pick basically, even before the equipment, is the transmission and distribution space. That remains to be my top pick basically in that. And I think given that there are, at least for the next 3 to 4 years, Power Grid has actually gone out and said that they are going to be spending close to around 40,000 crores a year in the capex. I think there is a huge runway for all the T&D players, especially the EPC guys. So that space remains to be very good, and especially the evacuation of the solar that requires new lines to be laid up. And the third part remains to be that the upscale of the transmission infrastructure itself. India largely has 220 or 440 kV lines. That is now getting upgraded to 750 and 830 kV. So you will see that kind of infrastructure upgrade also happening. The second part is basically the transformer manufacturers. And there, the only thing remains to be that there is a global shortage. And that's why that sector still continues to do well. But otherwise, it doesn't have a very great moat. But I would actually prefer the T&D as a first space, transformers for the moment, and then the equipment suppliers of the wind. That's the way basically I would look at.
Okay, great. And if I were to just completely shift tack towards FMCG, because that's one of the big buzzers this week, and there's plenty of buzz that we will see recovery within some of these names. We have the likes of an Asian Paints and HUL. There's a Jefferies note today which says that some of these have corrected 25-30%. Great opportunity to buy. How do you see it?
It's a difficult call, basically. Okay. Yes, you have a trading opportunity out here. But if you are really asking me, basically, would I have owned one of these stocks basically in my portfolio for long term as an investment bet? I don't think so. Each of these guys, we really look at it, I don't see they are doing more than 10-12% kind of even 10-12 would be an aggressive this thing. For multiple years, I don't see them growing in volume terms, basically 5-6-7%, and value terms, maybe total top line growth of around 10-12%. So for that kind of a growth, basically you are paying, and they are not cheap. All of them are 40-45 times still. So and that is the conundrum basically which I have.
Right. So Nischal, sorry for interrupting. Where within the value chain in FMCG do you see value therefore? Both growth as well as a decent multiple?
So growth, I would still say basically there are pockets, but multiples, I think within FMCG as well as if I would include even the distribution side, which is the DMarts and trends of this world, basically valuation is not a comfort at all. But there at least the growth is there. So that is the only way I would look at it. But FMCG to me is like a more of a trading play.
Okay, all right. So that's the way Nischal thinks of quite a few things within the market. We discussed 3 sectors. Thanks so much for those views, Nischal, for coming in and speaking with us. Always a pleasure.